Welcome to Trading Lounge and the US indices for the 27th of October. Starting on the weekly chart here, as you know from wave C or 4 here, we're looking up as wave 1 or wave 5 here. And in this journey up through here, we're looking for 5 waves. We've got this top of 3rd wave here and the 4th wave here. So let's go in and check that out. On the daily chart, we were looking at wave 3 here and wave 4 here, but obviously we're struggling with this pattern here now. So we need to look at our alternative counts. We had this as well. I had this as 1 and 2, and then 1 and 2 here, and then pushing up for wave 3. It still may be the case, but if this low here is breached, then that's technically over at that particular stage, and we'll need to look at this wave 4 being over here for this, and this is a 3-wave structure up here. So if I go to my alternative count page here, on this one here, we were looking at 2 counts in our alternative structure, and one was the triangle pattern and one was a simple wave 3 here with an A wave here, an A, B, C for the B wave here, and then down for the C wave here for this here. So I can't confirm this one here, and I can't confirm this one. We'll need to see some more price action here, but we do need to talk about what's occurred and at what point things become valid. So a little bit unfortunate, but this move down through here, from this low to this high here to start with, the 50-60% retracement levels here. So if we were looking at a triangle pattern emerging through all of this as an A, B, C, D, and E here for wave 4, then the 61.8% retracement level here would be a target to start with here. So we would need to look at this as a corrective move down here for wave C, and then a move up here to the 61.8% as wave D, and then the wave E here, and then pushing up from that point there. I don't think that's the case. It's more likely that we've got this scenario here. So let's just go in and have a closer look at that. So on the 4-hour chart, looking at it, squash it back up for us here as wave 3 here, an A wave here, a B wave here, and a C wave here at this point. So as I just mentioned, it really can't be confirmed until this low here is breached. So it's still possible that we have this as 1 and 2 and 1 and 2 here. I doubt it, because it's possible, but I kind of doubt it because of the size of wave 2 here, as I may have mentioned before. But one of the things to sort of keep this bullish to the upside here in a way is when we look at, well, there's a few stocks, but if we just look at Alphabet here for a moment, we've got our wave 3 here and our wave 4 coming down here, and as you can see, we've got a very clear 5-wave structure here for this as wave 1 here, and then we can look at this as the A, the B, and the C wave here, and then move up from that point. So this going up for wave, this finishing off here first, I need to just check on that, but that finishing off and then looking at wave B here pulling back up 50-60%, and then wave C here that may or may not pull down this far here, but definitely looking at that 3-wave price action. So if we're looking at a 3-wave price action here, still got this B wave and C wave to go, then it kind of makes the triangle pattern back over here look a bit more valid, doesn't it? If I just, whoops, wrong chart. Over here, finding support here and having this particular move here and then moving up through that way. So there are stocks that can support this scenario here. So we need to get a better understanding of this particular structure for this. So let's just cut through to back to the 4-hour chart here for a moment. There's a couple of things I want to talk about here, but just why I'm doing this here, you can just check out how I've counted it so far, just looking at a possible another alternative count. It's probably not the case, what I'm going to show you in a moment, but we do have this as, I have this as wave 1 and 2 here, and then there is a 5-wave structure here, which we could call 1 and 2 here, and then down for 3 and 4 and 5. That to me seems logical. This move here as 1 and 2 here, we could call this 1, 2, 3, 4 and 5 here, and then making this wave 1 sitting in here as well, just a bit of a long shot. So all of this becomes wave 1, and we actually rally a little bit higher than I think, and then we come down stronger in a third wave. I don't think it's the case, because we've got wave, if that's wave 1 and that's wave 3 here, and this is wave 4, it overlaps wave 1 here, so it's probably not the case. So I'll just move that there, but just something I wanted to point out to you, and I'll keep an eye on it, okay? So we've got 5 waves in this move here, which we call wave 1, wave 2 here, and then we'd need to look at 5 waves in this particular structure here for this, between 2 and 3 here. So what I might do is just, I could go to the hourly chart here first. So from the B wave here, we've got wave 1 and 2 here, and then 5 waves down for wave 1, and back for wave 2 here, and then counting this down here as wave 3 here. So from wave 2 we're looking down to wave 3 and 4 and 5 in this case, for wave 3, 4 and 5 to finish off in this instance down into this point here. This is the old lower wave A here, so that's one way of looking at it. So I guess for this to continue to the downside, I'm just going to bring across my 5-tick chart here for a moment. So a little bit complicated to see, but if we look at this as wave 1 here and wave 2 here, that would be this wave 1 here and wave 2 here, and going down for wave 3 here. I've got it counted a little bit differently on the tick chart, but it'll still give us the same result. So wave 2 here. So we can look at this as wave 1 and 2 here, and then probably 1, 2, 3, 4, 5 for 1 and 2 here, and 1, 2, 3, 4, 5 for here. So what I was thinking, this wave 4 here and this wave 4 here, what I was thinking is that if this is going to be bearish here, then we don't really want to find support on the 3400 here. We would see it move up here, and maybe you can go a bit higher and so on, but in a nutshell, we'd want to see it not find support on the 34 and then move down again. So one of the things that we could do to understand the bigger bearish picture here is say, well, okay, if this is going to be an impulse wave here, it should be rejected around the 34. It may go to 34.10 or something, but we don't want it finding, well, we don't want it finding support on the 34 if we're looking at this bearish picture here. So the next time that this comes down and finds, well, group 2 here is the support. The next time it finds this is resistance, especially the 72 area here, the 72, the 372, because group 2 is 65, 72 and 80. If that becomes the resistance, then what it tells me is it's telling me that it's rejecting the closest largest number, which is the 34 there. So that would also open up a move coming down into the 33 area at that point, and probably lower towards that wave A there. So there's a couple of things here we need to look at. First of all, if this is going to end up down at 33, then we need to see it rejected at 34, but that's always a little bit hard to understand, so that's why we use the 72. If the 72 here becomes the resistance, then you'll know that we're coming down to the 33 and lower at that point. So that, in my mind, takes care of the bigger bearish picture to the downside. If this market finds support back up on the 34 here, and doesn't back on the 34 here, if it finds support here and starts to move up at that point, well, then we need to look at our triangle pattern, but we'd also need to look at the other move that I just mentioned as well, as 1 and 2 and 3 here and 4 here and 5 here, because that shows up on the NASDAQ quite well as well. If I just bring the NASDAQ across here for a moment. So if we look at this as the B wave up here, I've got this as wave 1 and 2 here, then 1 and 2 here, and going down for the third wave here in line with the S&P 500. But it does count okay too as a 5-wave structure right to this point here. So, whoops, Daisy, that this down here, just 1, 2, 3, 4, and 5 to here. So in this case, we would see a larger rally come into place, but otherwise we'll see this 11,500 fail to find support, market failing to find support on the 11,500 and then moving lower at that point. So yeah. So there's two ways to look at that, but otherwise, if this is going to continue the way it is, then down around wave A is where we would be looking here. The low here, the low to the high at this point here, this 50-60% retracement level is here, and it's going to mirror this over here. So there's going to be a fair bit of support here. So it's probably be better to make decisions later in the pattern rather than earlier in the pattern here. And really, it's a game of support and resistance. Of tested support or tested resistance with the 11,500, and because it's the 61.8% and the 50%, and it's going to mirror this volume over here, then it could get quite messy in here. So that's why I think leaving decisions later in the pattern rather than earlier in the pattern. So yeah, look. It's probable that we're going to be moving lower, but we may end up... I'll just take this from this point here. It is possible for this to pull back up into this space, so we do need to be careful about that. So let's just recap the S&P 500 back onto the alternative counts here. We've got this situation here where we've got, first of all, we've got the triangle pattern, or A, B, C, D, and E here. And this is likely to come down to the 61.8% first, and then have that particular pattern there, and then this pattern here. And this would suit stocks, as I mentioned, like Alphabet, because when you think about Alphabet here, it's quite clear that there's 1, 2, 3, 4, 5 here for wave 1, and then an A and a B and a C here. So this finishing off here and then having this move and this move for this wave 2 here, that would fit quite nicely in with the triangle pattern for this market. Now, in both cases, we could probably see a move down here lower. This wave C down through here is also valid as well, and that can certainly occur as well. So it has gotten a little bit more complicated, but at the end of the day, what we'll just have to wait for, in one way or another, we can make money out of this, but we have to wait for the wave 4 either to be here or to be here. So you know, be careful about getting chopped up in this particular space here. If this market finds this 34 as support here, and the NASDAQ on 11,500 after it has another little move down through here, then we'll be in the triangle pattern. We'll have to take it from that point. Alrighty, I'll just leave it at that. Just a little bit unfortunate that this has occurred, and it wasn't easy as I thought it may have been. So I've led you astray. Apologies about that. But we just need to pick up the pieces and get back on the horse, and we don't need to rush anything at this particular stage. You know, we could get a trade out of wave 5 coming down through here, but otherwise we'll have to wait for this here and then trade up from that point. And obviously we've got the election, so all of this is really just stagnating into the elections, I guess. So, alrighty, thanks for tuning in. Cheers.